There's a moment in every trader's life when the market whispers, but most never hear it. I want you to pause whatever you're doing and listen with the same intensity you'd give a ticking time bomb. Because that's exactly what the market becomes when you believe timing is luck. When I first started trading, I chased perfect entries like a child chasing a moving train, always a step late, always off balance. My charts were filled with arrows, lines, indicators, and the illusion that if I could just predict the exact moment, the market would kneel in obedience. But the market kneels to no one. Livermore understood this better than anyone. Let me take you back inside his philosophy, the part that isn't quoted on social media carousels or motivational posters. Livermore didn't seek perfect timing. He sought confirmation. He believed the market should prove itself worthy of his money, not the other way around. His trick wasn't about being early, it was about being right. Imagine this scene. You're watching a stock edge higher, tapping resistance like a prisoner tapping on the bars of a cell. Every novice trader jumps in early, hungry for bragging rights. I caught the bottom. But Livermore, he waited for the bars to break and the prisoner to step into daylight. Only then did he move. I learned the hard way that early entries are the tax inexperienced traders pay for their impatience. And timing, true timing, isn't about precision. It's about proof. Livermore used to say, the real money is made by sitting. But the part most people forget is what comes before the sitting. The waiting. Patient, disciplined, uncomfortable waiting. In my early years, I mistook motion for progress. I saw a stock twitch and I reacted. A breakout attempt, I rushed in. A breakdown, I shorted instantly. I wasn't trading the market, I was trading my anxiety. And anxiety is a terrible market guide. It pushes you early, pulls you out late, and blinds you to the confirmation that would have protected you. Livermore's perfect timing trick is this. Wait for the market to confirm your idea, not your emotions. Because emotions will always tell you to act first. But the market doesn't reward speed. It rewards accuracy. Think about your last losing trade. Was the idea wrong? Or was your timing driven by impatience? For me, the answer used to hurt. Every loss was a scar left by acting before confirmation. But scars are lessons carved into your discipline. And discipline is the only clock that matters in trading. What would you have done in this moment, acted early or waited for confirmation? Comment your thoughts below. There's a fine line between being early and being wrong, and it cost me more than any bear market ever did. Let me take you inside a trade that shifted the way I see timing forever. I was tracking a tech stock, strong trend, clean structure, everything I thought I wanted. The setup felt perfect. A beautiful pullback, volume tightening, price coiling like a spring. And I jumped in early. Too early. The stock dipped slightly, then dipped again. And suddenly I had front row seats to my own demolition. Only later did I realize the market had never confirmed my story. The breakout level wasn't touched, volume didn't expand, the spring never released. But my impatience did. This is where Livermore's wisdom slices clean through all the noise. Don't anticipate, follow the market. Modern traders love to predict. They love to celebrate early entries, knife catches, and bottom calls like trophies. But those victories are illusions, shadows on the wall meant to distract you from the truth. The market rewards confirmation, not courage. Livermore had a rule. He only bought when a stock broke its previous high with authority. Not touched it. Not flirted with it. But conquered it. Why? Because confirmation tells you something no indicator can. There's real interest behind the move. To him, timing wasn't about guessing the turn. It was about recognizing strength when it stepped forward. Let's bring this into today's world. Every trader with a smartphone can analyze a chart. Every algorithm can detect patterns. But none of them can replicate the psychological weight of confirmation. Confirmation is conviction. Confirmation is demand. Confirmation is the market saying, yes, now. And that's why Livermore waited. He wasn't trying to be first, he was trying to be aligned. When I shifted my mindset from prediction to confirmation, everything changed. Win rates higher. Stress lower. Losses smaller and cleaner. Because now I was no longer hoping for validation, I was letting the market provide it. Livermore's perfect timing trick is simple but brutal. Wait for price to move in your direction before entering. Let the market reveal its hand and then act. Most traders can't do this. They want the dopamine hit of being early. They fear missing the move. They think waiting means losing. But waiting is your shield. Confirmation is your sword. And together, they protect your capital like armor. Would you trust confirmation more or still try to enter early? The most profitable decision I ever made was learning to do absolutely nothing. There's a moment in a trader's journey when they realize the market isn't a battlefield, it's an ocean. And timing isn't about striking, it's about waiting for the tide to carry you. Livermore understood this ocean better than anyone. He knew the market swells, retreats, hesitates, surges, and teases. His perfect timing trick wasn't mechanical, it wasn't mathematical. It was behavioral. He watched the market the way a seasoned sailor watches the horizon, not for signs of opportunity, but for signs of strength. Strength that proves movement. Movement that proves direction. Direction that proves timing. I used to chase every ripple. Every tiny wave felt like the start of a tsunami. But the truth is, most waves die on the shore long before they reach the beach. Livermore ignored the small ripples. He waited for the real tide. He once said something most traders never understand until years later. The big money is made in the big swings. And big swings always confirm themselves. The trap traders fall into is believing they're missing out when they wait. But waiting is an investment in clarity. When I started applying this, my trades changed dramatically. Instead of scattering my capital across dozens of half-baked setups, I waited for a few powerful confirmations. Instead of reacting to every dip or pop, I watched the behavior behind them. Instead of predicting the future, I followed the present. Livermore's trick wasn't timing the bottom or the top. It was timing the moment of proof. In today's market, where headlines scream, feeds scroll fast, and traders brag about risk, they forget the one thing Livermore never did. The market must earn your participation. Let me give you a modern example. A stock breaks out of a multi-month base. Volume explodes. Momentum is clean. This is confirmation. This is strength. This is where timing becomes aligned with behavior. Now compare that to catching a falling knife because a stock looks cheap. That's not timing. That's gambling dressed as analysis. Livermore didn't gamble. He calculated. He waited. He demanded proof. And when the proof came, he moved with force. Timing in trading isn't the art of being early. It's the skill of recognizing when a move has begun and riding it with conviction. The perfect timing trick is really this. Don't try to predict when the market will move. Recognize when it has started to move and follow it. How long are you willing to wait for confirmation before entering a trade? If I had learned this rule earlier, I would have saved a fortune, and so will you. Let's strip everything down to the core. All the charts, strategies, setups, risk management, fundamentals, they all crumble if your timing is wrong. And timing isn't about catching the beginning. It's about entering after the market proves your idea is correct. Livermore's perfect timing trick is this one rule. Backhand index pointing right, enter only after price moves in your intended direction, never before. This rule saves traders millions because it eliminates the number one cause of unnecessary losses. Acting on belief instead of evidence. Belief is emotional. Evidence is financial. When you buy after confirmation, 3 powerful things happen. 1, your win probability skyrockets. Because you're no longer battling random noise, you're entering during genuine movement. 2, your risk becomes cleaner. You know exactly where the trade invalidates. There's structure behind your stop. 3, your psychology stabilizes. You're no longer fighting the trade. You're flowing with it. I've seen traders blow accounts not because they lacked skill, but because they lacked patience. They saw a setup forming and jumped in early. They believed timing was about prediction, when in reality, timing is about proof. Livermore didn't try to be early. He tried to be aligned. He didn't chase bottoms or tops. He waited for the market to speak, and then he listened. In modern markets, whether you're trading stocks, crypto, futures, or forex, the rule is the same. If price breaks through resistance on heavy participation, that's confirmation. If a trend resumes after a controlled pullback, that's confirmation. If volume agrees with price, that's confirmation. The market is constantly signaling its intentions. Most traders just don't wait long enough to hear them. Your timing becomes perfect the moment you stop trying to be perfect and start trying to be objective. Livermore's rule saved him millions. It protected him from impulses, noise, and emotional sabotage. And it will save you too. But only if you commit to it. So the next time you see a setup forming, ask yourself, has the market confirmed my idea? Or am I trying to force my timing? If your answer is honest, your trading will transform. If your patience becomes disciplined, your timing will sharpen. If your entries follow confirmation, you will survive the storms most traders drown in. Because timing isn't a guess. It's a discipline. And Livermore mastered it so we can learn from it. Comment hook, do you believe confirmation is the most important part of timing?